All right, everybody, let's get started here. Thanks for joining today for our part one of our part two webinar series about lease administration audits. Part one here is going to be about deposits, security deposits, TI allowance, and utilities. And I'll drop the registration link in for part two at the end of the call here, and that is going to be about CAM, operating expenses, and taxes. So we'll cover all the bases in terms of why you want to audit a lease in these 2 hour-long webinars. My name is Matt Jaffoon. I'm the co-founder of Occupier. We're a lease management software platform that helps companies centralize all of their leasing workflows, from transaction management and site selection through lease administration and finally compliance with lease accounting standards. I am joined here by Denise Hinkle. Denise is a strategic advisor to Occupier, and she's also an independent consultant helping companies manage their real estate processes and data. And I will let Denise introduce herself.
Hi, thanks very much, Matt. I'm really happy to be here, and thank you very much for the opportunity to join you today. As Matt said, my name is Denise Hinkle. I'm a CPA and really have made my career in the real estate and commercial real estate space. I've seen this industry from many different angles and worked on behalf of owners, occupiers, developers, tenants, service providers in various different capacities, from accounting to controllership, to business development, and even at the executive level and business owner level. So I'm really excited to be here today, and I'm ready to dive in. Let's go.
Let's go. So just to give a little bit more background, Denise has been instrumental in helping us not only form our product roadmap, but also just meet the needs of our customers, because she has such deep expertise in this area. So it's a really good relationship. It dovetails really well with what we do from a software perspective. And just to give a little bit more background on myself, I am a recovering commercial real estate broker. I spent 10 years at JLL representing tenants and landlords in lease negotiations. So the way this conversation is going to work is that we're going to have Denise be the subject matter expert on pretty much every topic that we go through, and I might chime in with some broker or leasing commentary on like what you might look for, like when you're getting into a lease or trying to negotiate a lease. So that's going to kind of be the banter that goes back and forth. But just to run through this agenda, we're going to define what a lease audit is. We're going to go through security deposits, how to manage them, what all the nuances are around them. We're going to talk about TI allowances, how to negotiate them, how to bill for them, how to pay them, how to track them. Then we're going to talk about utilities and how to control those expenses. We'll do a brief overview about how Occupier works. It's not going to be a demo or anything, just a little bit of information on us. And then we'll reserve the last 10 to 15 minutes for Q&A. We've already introduced ourselves. Okay, Denise, take it away.
So I guess the first question that we have here is like, what is a lease audit? I think a lot of people think that a lease audit merely rotates around or surrounds the CAM tax and operating provisions of the lease. But truly, a comprehensive lease audit is going to contain and cover many other financial components of that lease, like what we're going to discuss today. As Matt had indicated, we have a couple of different areas, and if we have time, I have a couple of different bonus areas that we don't even have mentioned, of places where you can look into your lease to try to gain recoveries and really ensure compliance, by the landlord and the tenant for that fact.
Yeah, and just wanted to point out as well that there's probably 2 lenses through which you could look at a lease audit. One is on the individual lease level. So if you are looking at renewing your lease or just trying to understand how you can control your expenses or perhaps recover some of your expenses on the individual lease level, that's diving into that one lease. But you also have the opportunity to audit your entire portfolio at scale, and we'll get into how Occupier can help you with that later.
Sure. And I just want to add really quick that this lease audit, Matt, can really be done either from the perspective of the tenant or the perspective of the landlord. And really, the intent of the lease audit is just to get it right. There's should be really no arguments over, one side having more power than the other. It's really just to ensure compliance by both sides.
Right. So you've just spent the last 6 months painstakingly negotiating this 100-page document, which essentially contains protections for both the tenant and the landlord, which you've agreed on. So there really should be no disputes or debates. Obviously, sometimes you get into sticky legal situations. However, this doesn't have to be some sort of like combative relationship with your landlord. It's really, just enforcing what's already been agreed to in a negotiated contract.
Yeah, and as far as like how this process happens, I think you understand from the brokerage perspective, at the onset of the lease, there's a lot of negotiation that goes through between the tenant, the broker, the attorneys, the landlord, their representatives, their attorneys, and there's a lot of back and forth. And then this document winds up in the hands of either a lease administrator or a lease accountant, depending on where you're doing. And that person doesn't always have the benefit of the other discussions that the team has had up to that point. So they may not be familiar with what the intent was behind the deal or even some of the economic, negotiations that have gone back and forth. They're merely looking at a legal document, having to interpret that and then apply that to the situation at hand.
Right. Okay, so why is a periodic lease audit important?
Well, a periodic lease audit is important from the tenant's perspective in that they're really just trying to verify or validate the processes that are primarily in the control of the landlord. So, for example, the tenant gives a security deposit to the landlord, but their landlord is supposed to be using that deposit and applying that deposit in certain situations, but that money is in control of the landlord. The allowances per the lease, while the tenant is incurring the cost to build out their space, the allowance is held by the landlord until that money is either requested or transmitted back to the tenant. The landlord also incurs the operating expenses and rebills those expenses back to the tenant, and in cases, sometimes even with the utilities. And we're going to go in depth in utilities. And that's a really interesting area because there could be a lot of like hidden type recoveries that come from utilities. And then lastly, like I said, the landlord is responsible for allocating and procuring all of the calculations and all of the billings around these areas.
So essentially pretty much every important aspect of your lease, both
Yeah,
financial
pretty
and
much every,
non-financial.
for sure. And you could say the rent kind of falls in that as well, but rent usually is what it is and it's pretty easy. It's a number per the lease unless you're talking about percentage rent. But it's a number that the landlord just pays every month and it's pretty steady.
Yep, yep. Okay, cool. Let's dive into security deposits. So what is a security deposit, Denise? Let's just put basic terms out there.
Well, a security deposit basic term is an amount of money or a letter of credit, it can go either way, that is given by a tenant to the landlord to secure or give the landlord some comfort that the tenant is going to actually perform or complete their lease obligations. For landlords, it's the safety net, um, and it's an incentive for them that the tenant's not going to just walk out in the remainder of the lease term. And for a tenant, it's kind of just one of those costs of doing business.
Yeah, and we can talk a little bit later about the nature of security deposits, whether you're a Fortune 50 company and you're not required to give it to a landlord, or if you're a startup biotech company that has no prior track record financially and therefore needs to kind of secure like the TI allowance or your obligation under the lease, and some of the nuances into how you might negotiate those security deposits going into a deal. So let's go. Let's talk
Yeah.
about the landlord's responsibilities. So you cut this fat check to a landlord for a security deposit, or they're holding a letter of credit from your bank or their bank. What are their responsibilities with that cash?
Well, it's important to note that like each lease is going to be written differently, and there are different laws per state that may or may not cover how to handle security deposits from the landlord's perspective. Um, you really need to look to the lease and understand what is the type of deposit. Is it, secured by a cash or a check that the tenant needs to cut to the landlord? It could be secured by assets that the tenant might have in their possession. And it could also be a letter of credit that is drawn upon only in the cases where the tenant defaults on perhaps a financial obligation or covenant under that lease. The lease will also say like if there is, segregation of funds, which means the landlord may have to hold this security deposit in a completely different account. It could be in combination with other security deposits in that property, but you really, if you're a tenant, you want to make sure that those funds are separate and aside from the landlord's operating expense account or operating cash account. And in some jurisdictions, the security deposit also needs to be bearing interest. So that account should be an interest bearing account. Other states like Illinois, not an interest-bearing account. It can just be held. Uh, it's not even a law that it's got to be held segregated from everything else, but it should be. But those don't necessarily bear interest here. I'm not sure about like out east, Matt, if you've seen that before.
I'm not 100% sure either, to be quite honest. But yeah, it's probably a jurisdiction by jurisdiction basis.
Yeah. Another thing that you might see is that, the landlord should be responsible for ensuring that if there's a burn down of that security deposit, we're going to cover that in a minute, that the amount of the reduction in security deposit is returned to the tenant. So if it's cash deposit, the landlord should either be cutting a check or applying those funds. Letter of credit, you could reduce the letter of credit amount too. And it also should, be on the up and up on how those funds are applied if the landlord needs to take a portion of that deposit and apply it. In what cases is that allowed? Is it just because the tenant didn't pay their rent? Is it because they've damaged the space? Can it be applied, to maybe the last month's rent during the period? There should be, language that dictates how the landlord should be handling those situations as well. And then you also want to make sure that the landlord has some guidance on how and when they return whatever is left of that deposit. At the end of the lease, everybody wants to have their deposit back and make sure that the lease, stipulates what that process looks like. So the landlord is responsible in how they should handle that return.
You mentioned burn down. Let's talk about this because I know that from the broker's perspective, I've negotiated burn downs of letters of credit and security deposits for tenants. Obviously, as you perform your obligation as a tenant throughout the lease term, the risk for defaulting on that lease obligation goes down. So you would look for like a requisite return of some portion of that security deposit that you could use for other things within your business. So what we always, as tenant reps, advise your client is like, that's technically your money and you could deploy that for other areas for growth for your business or whatever you want to do with it. You should be asking for that back kind of in lockstep with like meeting those obligations through over the lease term. So why is negotiating a security deposit burn down important?
Well, like you said, it all comes down to cash flow. That cash, especially in the case of a cash deposit, can be used for other purposes in your business. Now, the interesting part is that from the landlord's perspective, it's not, they're not necessarily motivated to be returning cash to a tenant, even in the case where those funds are segregated and held aside from operating funds, because it's giving them a sense of security that the lease is going to be fulfilled through the end of the term and all of the covenants are going to be abided by, right? As well as any, damage to the space upon the tenant's move out. But really it's important for tenants and landlords to really monitor when that burn down occurs and what that means. Does that mean that the funds are going to be returned to the tenant? Does it just mean that the funds are going to be applied to, open charges or the forthcoming charges? And what is the mechanism of reducing that liability? Burn downs
Yep.
make sense, right? Because like as the lease term matures and you're moving through the lease term, the total potential financial cost of that lease goes down. So therefore, I would argue that a burn down's a good idea.
Yeah, totally. Just one thing I forgot to mention at the outset is if you have questions while we're going through this, just drop them in the Q&A and we'll hit that queue up at the end. So I mean, maybe there's not a lot of buildings trading hands right now, but if your property does actually trade, your landlord sells your property to somebody else in the course of your lease term, what happens to your security deposit?
Well, the security deposit should transfer at the end of the day, should transfer to the purchaser of the property. When these buildings are bought and sold back and forth, the buyer typically will assume all of the rights and the responsibilities pertaining to that property. So that would be all of the leases, obviously, all the security deposits transfer. Some of the service contracts may transfer depending upon the deal, but everything is really assigned to the purchaser. Important to note that when your building is sold, typically that security deposit amount is going to be noted on an estoppel agreement or even sometimes I've seen it in an SNDA, but primarily the estoppel agreement. So it's important to take a look at that and confirm that the landlord is, reporting the correct amount of your deposit before that transaction occurs.
Yeah, and from the broker's perspective, this might just be a little bit more abstract than just security deposits, but I always advise clients to really know who your landlord is when you're going into a lease, and especially their property management company. Now, some landlords might have in-house property management, be a vertically integrated owner, and when they sell the building, a whole new property manager is coming in. Some landlords might outsource property management to a firm, and that firm might stay on and manage the property for the next owner. So I think it's really important that you get a good point of contact at the landlord's property management company, and develop a relationship with them, because these questions that you're going to have with respect to your security deposit are typically going to be handled by that property manager initially. And they should be educated on your lease and be able to get you the answers that you need. So I think from a tips perspective, like if you're looking at spaces, and I know sometimes the space dictates the building that you go to, but try to understand how that landlord manages the property before you get into a lease agreement with them.
Yeah, I would say even aside from, knowing how they operate and manage the building is try to get a feel for the financial standing of your landlord. Because the last thing that you want to do as a tenant is have a very large amount on deposit and not be able to get that back at the end of the lease because the landlord has spent that on operating costs or other things. So it's, while it's a protection for the landlord to have that deposit in place, it's, as a tenant, you need to be comfortable that that deposit is going to be used for its intended purpose.
100%. Okay, so here's some tips, some takeaways that you could, leave tomorrow and use when you're thinking about your security deposits. So, obviously, from occupier's perspective, if you're not using lease administration software, that doesn't apply to you, but you should be. And the first thing you should look in is where's all the data of your leases live, right? Like if you're using a database like Occupier or another lease administration system, confirm in that system that you're actually tracking that information, because what a lot of tenants tend to do is, especially if you're in growth mode or you have a large portfolio, is you sign the lease, it gets put into a file folder somewhere, and then it's like, 5 years later, you're dusting it off, trying to figure out what we need to do next. But be proactive about getting that data organized, even if it's in a spreadsheet, just so that you can accurately track, do I have a burn down in this location? How much is my security deposit? What are the rights and obligations that I have to get that money back? What does the landlord have to do to perform in order to give me my security deposit back? So I can't stress it enough. Just get your data kind of clean in whatever format you can figure it out. And Denise, why don't you take these ones here?
Sure. The other thing, and we do have a couple of questions that have come through on the chat too that I'll try to hit before we move to the next slide, Matt. This next point is just confirm that the landlord received the funds. You need to make sure that not only you as a tenant are recording those funds as a potential receivable on your accounting records, but you want to make sure that the landlord's in agreement from the very beginning of the lease. It's not a bad idea to have a transaction history of you sending or paying that security deposit, but make sure that you're in agreement from, the very beginning, as well as the application of those burn down funds if there's a burn down provision in the lease.
Yep, we'll get to these questions in a sec, but because they're all kind of related to the security deposit section here. Go ahead, Denise.
Yeah. The third one is to make sure that there's a process at the end of the lease term for recovering that. And that, kind of jives into the first 2 points in that someone within the real estate department of the tenant needs to make sure that they're proactively reaching out to the landlord to ensure the receipt of the security deposit. There's been many, many situations that I've been involved in where if you go and do a portfolio wide audit of security deposits, inevitably there's going to be funds that haven't been reimbursed to the tenant, and it's merely just because they've forgotten about it. It's not a malicious decision on the part of a landlord to do that. It's just with the amount of activity that they're managing, sometimes things slip through the cracks. And then the next one, dovetailing into that is, take a look at expired leases, ensure that the deposit was returned to the landlord. Now, this can be a little bit tricky in that in many times the deposit or the receipt of the funds in the case of a, a hard check or a wire transfer, that might go through an accounting department or receivables department and not ever come through the real estate team that's managing that lease. So there needs to be some coordination between those two groups to make sure that A, the deposit is received at the end of the lease term, and B, it's applied appropriately. And then the last point of this is to make sure, again, that you work with accounting to make sure that the transactions are recorded. Part of tracking security deposits in your software is for your auditors, your accounting team to say, the amount that the real estate team has recorded as on account for security deposits is the same as what accounting is reporting as that receivable. In most cases, the difference are probably immaterial and would not necessarily get caught in an annual audit situation, but it certainly doesn't hurt to work together to make sure that those amounts are correct.
Cool. You want to tackle these security deposit questions that came in?
Sure. The insurance related products, the question was, are any insurance related products to cover the deposit? I've not personally come across any of those. I'm not saying that they don't exist, but I haven't seen them. Have you, Matt?
I'm familiar with a company called OTSO, OTSO, who provides an insurance product that covers the security deposit. So I think there is an emerging market for this out there, which obviously allows the tenant to not have to kind of lock up that cash with a landlord, and it gives the landlord the ability to apply insurance rather than hold on to the security deposit. But that's a really good question, and I'm sure that there's other products out there as well.
Yeah, great question. Learned something new today on my own webinar. Never a bad thing for sure. Second question, is there a limit to what a security deposit can be applied to? Have you negotiated what can it be applied to? All right, so this is kind of a joint question. Number one is typically, yes, there is a limit to what a security deposit could be applied to. Always look to your lease to see what those situations are because they will be stipulated and explained. In my experience, typically it's been any unpaid rent or additional rent. So to the extent that rent is not paid by a tenant, landlord can apply that security deposit to those outstanding charges. Or if there's damage within the space that the landlord needs to fix and the landlord pays for those repairs, they could also potentially use that deposit against those repairs. Anything additional, Matt, that
No,
I haven't
no,
thought of?
no, I just think that clarifying that in your LOI or your lease negotiations is important because sometimes a landlord might try to, cover more things that a security deposit could be applied for. But if it's really just like rent, additional rent and damages to the property, that is typically your standard set of things that they could be applied to.
Yeah, there's another question here, regarding segregated accounts with annual statements to the tenant confirming funds. I haven't seen annual statements with regards to security deposits. I have seen the segregated accounts, but I don't think I have ever seen confirmation of that actually happening from on the tenant side of things.
Yeah, that's a really good point. I think, the tenant they have to be very proactive in order to kind of confirm that that's happening. I mean,
Yeah, for
maybe that's
sure.
on your attorney to understand the local laws on that as well.
Yeah, for sure. Okay, why don't we move on here
Yeah,
and
let's
see what
keep
we got
going.
in the next slide. Let's keep going. Um, Importance of tracking your security deposits. The first is, there was a lawsuit with a fashion house that they sued their landlord over the return of their deposit. And there's actually, a case for this. We do have the link for this. If anybody's interested in actually reading through this example, feel free to let us know. We're happy to send you that link. Letters of credit. I mean, this is a big one, with the SVB, bank situation. Um, you have any insight on this one, Matt?
Not from a security deposit standpoint, but yeah, I mean, like, I guess it goes even further than understanding the stability of your landlord. Understand the stability of the bank who's holding your security deposit too, because obviously that's something that this crisis with SVB and First Republic Bank brought into the public realm, which is they have exposure to commercial real estate lending. They're holding security deposits for tenants. In the case of SVB, that had to be unwound by the government and then sold to somebody else. Like, what happens to my security deposit? What if you're in the middle of terminating a lease and you're expecting that money back, but it's caught up in a bankruptcy proceeding? So this is another example where the tenant probably is almost like a black swan event, and you have to be able to be prepared to track that money down essentially. And we can share this
How
example
would,
with you as well.
yeah, I mean, how would you even know? I don't think, from a tenant's perspective, if they're signing a lease, are they even going to know who the bank is on the landlord side? I'm not sure how you would even validate or verify that.
Yeah, you just got to ask. You probably don't know until you send the wire.
Yeah, you got to ask for sure. And then the burn down is the last situation that we're talking about here, and we talked about this in detail a little bit ago, but it's important to make sure that tenants are tracking those burn down dates, and if there is some action that needs to be taken in order to actually achieve that burn down process.
Yep, it should all be written in your lease.
For sure, for sure. So the next area that we want to cover is allowances. It's kind of the next topic. I think we're all familiar with what an allowance is. In the case of a tenant improvement allowance, it's really funds that are given by the landlord to the tenant, typically used for the build out of their space and help, to cover those improvements. It is, an important and sometimes material financial component of that lease, and it goes into, everybody's calculations of evaluate when they're evaluating the economics of the deal.
Yeah, and I think it's very typical for tenants to just think they're going to get this slug of cash from their landlord, but really that TI allowance is being imputed into the rent. So you really need to make sure that you're getting as much as you can from your landlord from the tenant's perspective, but also that they're going to perform their obligations with making sure that you're receiving the information that you need to understand if the work has been substantially complete and at what phases you're able to request that TI money from your landlord. So in the case of
Yeah.
looking for a space and negotiating a lease, I mean, there's a couple things that you could do to optimize your TI allowance, and it all kind of depends on like what the nature of your operation is, right? So if you have a heavy office build out, if you're like a law firm and you're building out a ton of private offices, it's just going to be an expensive build out. So you need to go into the lease negotiations, obviously knowing the market conditions, the market rates, the market TI allowances, but then like how can you manage your expectations from a build out perspective so that you're keeping that TI allowance from not being too high on your side, because you're inevitably going to be coming out of pocket expenses on your own up over and above this TI allowance, whether that's for furniture, fixtures, and equipment, or just additional money to build out the space. So um, strategies could be like, let's look for second generation space that doesn't need a lot of build out, or let's look for plug and play sublease space where we could take the TI allowance off the table and then just negotiate a rent. So TI allowance is one of those negotiation terms that, can really dictate the total overall kind of financial exposure that you have in your lease.
Yeah, have you seen more of a fixed number for allowance or like a reimbursement of expenses? Because I know it can go both ways.
Yeah, I mean, I think it's really market to market what TI allowances are. I mean, obviously, if it's a hot market and landlords have the upper hand, they may just tell you, look, you can take the space and as is condition, you build it out yourself. In other situations, there's a set dollar amount, and I'm sure even submarket to submarket in say Chicago or Boston, you're going to get different TI allowance amounts. There's also the turnkey deal option, which is where you go to the landlord and you just say, hey, here's my requirements for a build out, and I want a turnkey lease, meaning they're just going to cover the cost of building it out. And that's just going to be imputed into your rent. So you're not coming out of pocket at all for any of the build out, except for anything over and above that, like turnkey amount. In that situation, you're typically having to agree on a work letter before you sign that lease and agree on the pricing schedule of that TI build. So the landlord knows that, hey, I told you I'm doing a turnkey deal, but really it's only going to be up to a certain dollar amount that they're going to be willing to cover. In some situations, a landlord might offer to amortize additional TI over the term of the lease at a interest rate and put that on top of your base rent as well. So there's all sorts of ways you could kind of maneuver what that TI allowance is. But at the end of the day, it's primarily driven by what is the market. And that's going to start to set the floor for those negotiations.
Yeah, so I guess, this slide is about how do you bill your landlord for TI allowance? I guess that's going to assume that, A, the amount isn't a fixed amount, because if it's a fixed amount, the amount is what it is. And B, I think we need to work under the assumption with this slide that, the landlord is not completing the work. So it's not the landlord's work letter. The landlord is, the one that is governing the contract. So assuming that the tenant is doing the work and uh, the amount of the allowance is not fixed, I guess how do you bill your landlord is you save your receipts, you summarize them on some sort of a form, you collect your lien waivers from your contractors and make sure that the underlying property isn't going to have a lien put against it, and you submit that packet to your landlord.
Yep.
And then the landlord then, according to the lease, will reimburse you in some fashion. Wire funds usually is what I've seen in practice. Again, because you're, responsible for basically collecting receipts, collecting contracts, and submitting it. If you think you're owed money from your landlord, what do you do? I mean, the biggest thing is to, make sure that you're owed the money. Nobody wants to walk in there and be asking for funds to find out that they're wrong. I think that sets the wrong tone.
100%. You gotta look at your lease and you got to look at all the bills.
Right. And I think it's also helpful to make sure that you get involved, those people that were involved in perhaps the build out. Maybe it's a internal, real estate team, um, construction managers. It really kind of depends upon how the organization is set up. And the biggest tip that I would have is that, number one, read your lease. Number two, read your lease. Number three, read your lease a third time. Look at your accounting records. Try to see where they match up. If you have, copies of those funding packets that were done along the way, that's often helpful. But at the end of the day, just make sure that you have received the allowance that you're due from the landlord. Nothing more, nothing less.
All right, let's hop into the second half here. Let's talk about utilities and why they're important.
Sure. Utilities can be important, but they also can be pretty tricky from a lease audit perspective. Utilities, this is for use of utilities within the tenant space. So electricity, water, cable, internet, all those things that we would call a utility in a traditional sense. Um, the case for utilities is really the audit perspective is when the landlord is actually billing you for those utilities. So if you're paying your electricity bill directly to your utility provider, typically not going to have a whole lot of potential for recovering from an audit perspective unless the meter is not wired appropriately or not allocated only to your tenant space.
Yeah, that was one thing I was going to say is that I used to try to push for tenants to always to have their space separately metered, especially in a multi-tenant office building, because once you're commingling those services, then it's a lot harder to kind of peel back. Okay, was I billed the proper amount? I know in most office leases, you're billed a per square foot rate for electricity, as an example, and it's really hard to tell. Like, did I overpay? Did I underpay? Am I going to get hit with another expense because it was a really hot summer and AC was going all the time, and I didn't budget for that. So by having your space separately metered, obviously you can have a little bit more control over the utility expenses that are specific to your actual premises.
Sure. And really the components to understand, with navigating this type of an audit is to understand like what is the meter tied to. So it's the actual wiring in the meter. And there are experts that can dig into this for you because if you've ever seen like a utility closet in a Class A office building, there are so many wires and meters that you wouldn't know like which meters go and where. You also need to understand what the rate per unit is. So is the rate per unit directly from the utility company? Are they using a consolidator perhaps for things like electricity? Is there a delivery fee? And in the case where the landlord is billing, also understand, whether there is a markup and how that markup is determined. All of those different areas can be ripe with, problems. And it can be as simple as a math problem to as complicated as the utility meter is not only covering my tenant premises, but the common area hallway and the elevator lobby, say, and knowing like where that meter is can really get dramatic differences in what your bill would cover.
Yeah, especially in like multi-building office parks where there's other amenities and other uses that are happening in that property. You want to make sure that those are segregated out from your actual space.
Yeah, I think the more complicated or complex the property is, the more, rife there is or potential there is for error. So, a Class A office, just an office building, not, that can have one set of problems. But to the extent that you might have retail space on the first floor, or you have a hotel or condos on the upper floors, office in the middle, and retail on the bottom, that all kind of plays into like how complex and how many errors you could possibly find here. Do we have a quick minute so I could cover two little bonus areas?
Yeah, I think we have some bonus areas for our audience here. Why don't we dive into those, Denise?
Sure. So the first bonus area that I have is actually I have a really good story about it. It's space measurement. So in many cases, leases can be written with charges per square foot for utilities, for rent, for different things. And how you measure that space affects that other piece of that calculation. It could be $2 per square foot, and your square foot measures it. Pick your favorite number. In office leases in particular, there can be different standards that are listed as to how that space is measured. Let me give you an example. I was working with a tenant. It was actually a Manhattan office building, and they were full floor tenants, and they occupied multiple floors. When the floor plates were created and the drawings were created, it included kind of a notch out in the exterior wall that contained a fire escape. That fire escape area was actually included in the tenant's calculation for how much rentable square foot that they occupied. When the tenant then hired us, I was actually working for Deloitte at the time, but they hired us and we worked with an architect company, and the BOMA standard that was listed in the lease specifically excluded that little notch out for the fire escape because it wasn't considered tenant premises. And they wound up getting back several $1 million over the life of their lease, from overpaid rent and overpaid charges that were paid on a per square foot basis, all for this little fire escape spot on a
Yeah,
couple of different floors in their building.
yeah. So always make sure that the measuring standard is explicitly stated in the lease, because if you don't have that in there, there's really no grounds for you to argue over like what your rentable square footage should be. And then also when you're negotiating that lease, make sure that you call out the difference between rentable space and common area space. So you're always going to be able to negotiate a common area factor in the building, which is the percentage of space that is dedicated to corridors, lobbies, cafeteria, things like that, so that all of that square footage on the floor plate isn't being applied to your rentable square footage.
Yeah, I'd even suggest, after construction of your space is to hire an architect or have that space measured according to the standard in your lease. That's the time really to do it, to make sure that, everything is on the up and up from day one. Because it's always more difficult to go back and try to negotiate and actually recover those funds than it would be to correct a potential problem at the outset.
Yeah, and a pet peeve of mine when I was actually a leasing agent for office buildings on the landlord side, let's say a tenant leaves and the last lease was X square foot. Well, now your landlord's asking you, hey, could you market this at this many square feet? And it's always like, well, how big is the actual space? Can we get it measured so that we know? Because we don't want to be, pulling tricks on the tenant, and we don't want to end up in a situation where that tenant, can audit their space and then get in a situation where now you owe your tenant back rent or rent credit.
Right. And then, it's also understanding this also plays into the calculation of pro rata share for those tenants that have to pay pro rata share of certain expenses. You need to understand that even though you might measure your space, the overall measurement of the building might not actually be what the landlord is putting out there. And we're going to cover this a little more in part 2 of our webinar. But my last note on this is just understand, the difference between your rentable square footage, your usable square footage, and, carpetable, I guess is the third one, to understand that there are differences in those. And the square footage that you think you occupy might not actually be the square footage that you use per your lease.
All right, what's bonus area number 2?
Bonus area number 2 is percentage rent audits. So for tenants that are retail tenants that are responsible for paying percentage rent, it's one of those areas I think that, can be overlooked when you're considering areas where you want to make sure that the economics are, true to what you agreed upon in the lease. Many leases will use a net sales number for their breakpoint to calculate their breakpoint under percentage rent. And that net sales number is usually gross sales from the space less a bunch of negotiated type of exclusions, or adjustments plus or minus. And it's important to make sure that you've got the right adjustments to that number coming out in order to accurately calculate any percentage rent due under the lease.
Obviously very important today because, I think I saw an article from ICSC today that like 49% of US retailers are planning expansion now. So there's going to be a lot of retail leases signed over the next few years, and making sure that you have all of that data at your fingertips in order to calculate your percentage rent is probably the step one.
Yeah, and even for tenants that are struggling that, are able to negotiate percentage rent in lieu of a base rent charge, understanding what the term sales means, like in detail. Sales includes everything from the space plus or minus employee discounts and anything else that might be an adjustment. It's an important part of the calculation, and it's a critical part of the calculation to get to the right number.
All right, we got a question here that I'm going to throw at you, Denise. Can you speak to TI reimbursement and missing the required date for the requested reimbursement? Have we seen any workarounds? So I think that this is from the example of a tenant. If you miss the date to request reimbursement back from your landlord, what happens? I mean, is it a handshake deal? Like, hey, I know I missed the date, but you still owe me this money. Like, what happens in that situation?
I think the first point is really try not to miss the date. I mean, this is why you have these administration systems like Occupier to make sure that you've got everything recorded. In the case where you do miss the date, you really got to look to the lease and see if there's a penalty around missing that date. Some leases could be written that says, like, if you miss the date, you miss the date, you're out of luck. In other cases, you might say, like, might go to the landlord and say, look, hat in hand, I missed the date. Can you work with me to help me?
Yep.
It really kind of depends upon the quality of the landlord in a lot of cases. Either they're going to be working with the tenant, try to keep that tenant happy, or they're going to put their foot in the sand and say, nope, too bad, so sad.
Yep. Yep. Another reason why you should always get to know your landlord before you sign a lease with them, right?
Yeah, for sure.
All right. Cool. I told you I wasn't going to give you too hard of a sales pitch at the end here, but I just want to lay out exactly kind of how Occupier works and why we think we're different than most lease admin systems out there. We've seen kind of this proliferation in real estate management tools over the last couple of decades, to be honest. But a lot of them are focused on a single kind of workflow in the real estate management process, whether that's specifically for lease accounting or if it's for lease administration. But from my background and our experience here at Occupier, we think that the full lease lifecycle needs to be managed and the data needs to be accessed by anybody that needs it. So we've actually created a software that allows you to start a transaction all the way through lease execution, transfer that data into your lease administration module, and then power your lease accounting workflows with that data. So with one single system of truth, you can satisfy all the internal and external stakeholders that are involved in site selection and lease negotiation, your internal team that pays the bills, tracks the expenses in your administration team, your lease administration process, as well as other stakeholders in the business that might need access to real estate information, whether that's general managers or regional managers or department heads. And then, of course, your finance team who needs to close the books in accordance with ASC 842 or IFRS 16 or any other lease accounting standard on a regular basis. So as long as that information's central, it's in one format, then everybody at the company should be able to use it for all of their real estate workflows. So that's Occupier in a nutshell. I am going to copy paste the registration link here for the next part 2 of our webinar. And I'm going to leave the floor open now for any questions. I know we said we do Q&A at the end, but it seems like we've kind of been able to handle them as we've gone. But if anyone has any questions, please speak now in the Q&A.
I want to throw in just one final thought here, and that, in my experience and from the leases that I've seen, is that over time, leases are becoming more and more complicated. And there are more and more negotiating points that are being raised by both tenants and landlords. And I think in general, the documents and portfolios are becoming more complex. Therefore, I think it's becoming more important for everybody on both sides of the table to make sure that they have a good, solid understanding of that document and really track things like what we're talking about today. I think without tracking them at a portfolio level, it's very difficult to understand, what your responsibilities are under those agreements, and really just to ensure that everybody's on the same page when it comes to how that lease is going to be administered long term.
100%. And Mike Hammerslag, thanks for putting all these definitions in the Q&A and pointing out some of these other terms that people can look up on their own. But yeah, there's certainly a lot of different ways that you could cover a lot of the exposure in your leases by just understanding what a lot of these definitions are, for sure. I have just posted the registration link for part 2, which is coming up on Wednesday, October 18th at 2 p.m., same time as today's. We'd love to have you join. Thanks for joining this webinar. We hope you learned a few things. Denise, if anybody wanted to get in touch with you, how would they do that?
Sure. You can reach out to me. My email address is denise@denisehinkle.net. It's just my name, .net. Feel free to send me an email, and I'd be happy to continue the conversation.
Awesome. You can reach me at matt@occupier.com. You can check out our website, occupier.com. For more information on us. And I actually saw somebody raise their hand. Maybe it was Nabin. I don't know if he was just saying goodbye or if he has a question, but I'll give you a second to pop a question in the Q&A if that's the case. I think he was just saying goodbye. Okay, everyone. Thanks for joining. We appreciate your time. We hope to see you on the next webinar. Thank you, Denise.
Yep. Thanks for having me.